Let's get across the market open now. Henry Jennings joining us in markets today. Henry, welcome to Thursday. So the focus clearly being on what we heard from Jerome Powell, to seem perhaps to be slightly more hawkish than anticipated.
Yeah, good morning, Andrew. Yeah, I guess slightly more hawkish, but I guess at the end of the day, there's not a lot of conviction at the moment either way. And he did say that there's not a lot of conviction in terms of the dot plot from the members of the board. He was talking again about two rate cuts in 2025, a half a point. So that is obviously the key, and this is hardly unexpected in terms of the market. The market did nothing really on the back of it. What was interesting, I guess, was the downgrades to the growth estimates to 1.4% by the end of 2025, which was down from 1.7% since they talked about that in March. Also talking up inflation a little bit, 3.1% at the end of 2025 from 2.8%, which was the forecast in March. So clearly they are making some adjustments, and they are expecting to see the effects of those tariff increases feed through into inflation in times. But I guess we certainly haven't seen that as yet. The CPI is still relatively benign. The jobs number is still holding up very well. They did increase the projection in terms of the unemployment rate to 4.5%. So they are tinkering, I guess, with their forecasts. But I think there's a degree of uncertainty, especially given that July 9 we have the tariff extension expires. In theory, July 4 is when Donald Trump wanted his big, beautiful tax bill to pass. And of course, throw into the mix what's happening in the Middle East at the moment. And there is a degree of uncertainty there. But certainly, Jerome Powell talking perhaps a little bit more hawkish, but certainly, two rate cuts forecast for this year. And the market really didn't do an awful lot on the back of that. So I think realistically, it did what he had to do. Straight back from from Jerome Powell. Interestingly, Donald Trump said that he might appoint himself as Federal Reserve Chief next time out, which is interesting. He's taking a leap out of Scott Morrison's book, perhaps. So, yes, steady as she goes, I guess. And some commentators saying that Jerome Powell is basically taking the summer off. And given that the US market is closed on Thursday, and with summer well and truly upon the US, Friday will be a pretty quiet day, unless, of course, something happens dramatically in terms of the geopolitical scenarios.
Well, which is possible because clearly Donald Trump, he's not giving anything away as to whether the US will get involved militarily in the
Yeah.
Iran-Israel conflict. I mean, is that perhaps what investors remaining conscious of at the moment? Just remaining cautious, obviously watching oil in particular.
I think so. I think a lot of investors, I was talking to someone yesterday, a lot of institutional investors are pretty much sitting on their hands. It is end of financial year as well, so there's a bit of rejigging in terms of portfolios, reports to be written up, etc., valuations to be made. So a lot of institutions sitting on their hands. I do get the feeling, we've gone pretty quiet. We hit that record high on the ASX 200 and we've come off it, but it's more a drifty come off than anything else. Although we have seen the iron ore miners under some pressure with that iron ore price in Singapore down to sort of 92.5, $93 a ton. So they have come under pressure. The banks have held very firm. The technology stocks holding firm. Gold comes and goes on a pretty much a daily basis, depending on what's coming out of the White House. So you get that. I get the feeling that we are due for a move. I'm not sure which way the move is going to go, but I don't like it when it goes kind of quiet and flatlines for a period of time, with the sort of Damocles, I guess, hanging over our head in terms of what's happening with whether the US does join with Israel in attacking Iran and supplying them with those bunker busting bombs, which seems to be the key here. So, I think we're still in watch and wait mode. SPY down 31 points, so we're clearly drifting off, continuing to drift off, probably more in resources than anywhere else. US banks were pretty firm last night on the back of the no change to the Fed. Higher rates for longer does probably help the banks in the US with their margins, and probably helps us here as well with our banking sector too. So there's no reason to panic, but you just get the feeling, that it's quiet, too quiet perhaps, and that there's something that's going to disrupt the status quo, disrupt summer. I'm not sure which way that will go. It could be that Iran surrenders, I'm not sure how a surrender looks, or it could be that the US actually joins with Israel. I think that would be a significant negative for the market. That would certainly be seen as not a good thing, I suspect.
Yeah, certainly be unnerving for investors and
Yeah.
markets more broadly. Obviously, the energy complex having benefited from, well, I guess the likelihood that there could be supply disruptions in the Middle East,
Yeah.
and uranium in particular having done very well.
Yeah, it's funny, isn't it? The uranium sector, which was heavily shorted, has had an amazing bounce, which defies the fact that the uranium spot price hasn't really risen that much. You would have expected more. But what has been, I guess, the catalyst for this sector is two things really, which was a couple of months ago that Sprott, which has a big uranium physical trust, was buying into bombed out uranium stocks, increasing their exposure. And we've also seen in the last few days or the last week, Sprott, because their NTA of the ETF has risen above, well, the price has risen above the NTA, they can issue more shares. So they've raised, they were initially going to raise 100 million bucks in issuing new shares or new units, but they actually went to 200. There was such a demand. So that's really galvanized the uranium stocks. The shorts have been scrambling to cover. We've seen some big rises in the likes of Boss, Deep Yellow, Paladin, even Silex in the enrichment space has been rallying hard. So there's plenty going on. And of course, the backdrop to uranium is quite positive. Donald Trump is embracing the whole nuclear thing. Data centers are embracing the nuclear thing. We are seeing, more nuclear reactors planned, and I guess an acceptance that nuclear has to be part of the increased energy supply, which all these energy hungry data centers are going to use. So that has really perked up the sector, and we have seen those shorts cover and those big rises in the stocks. Whether it continues remains to be seen, but you'd have to think that there is probably more to come, especially if we see the spot price move up towards 80 bucks rather than sort of here around 75.
Henry, you mentioned gold, of course. Obviously,
Yeah.
given those geopolitical concerns, it is the safe haven. More forecast
Yeah.
there that perhaps we are heading towards 4,000. But well, there's certainly some of the, particularly the larger producers, struggling at the moment.
Well, they are struggling. UBS, well, to be honest, they're not struggling.
Well,
They've had
struggling
such
to see any further significant price rises, given where the gold price is potentially going.
I mean, the market is a harsh, it is a harsh critic, isn't it? And let's face it, UBS downgraded both Northern Star and Evolution. And I've seen another downgrade this morning coming through for Evolution. These things ran really hard, and that's something, that I think, we've all been taught in the last few years is that momentum can be extraordinary. Newton's first law about inertia and body moving in the same direction until an external force acts upon it. It is very much the fore, and we've seen this with the gold price and the gold stocks as well. They have been moving in one direction, albeit with some blips, but then you get an external force a la UBS, etc., downgrading, or just the prices are run just too hard and too fast for these miners. They're all in the top performers of FY25. And let's face it, we're coming into the end of the year. People are happy to lock in some profits, people to take some profits. And the gold sector comes and it goes, but I think there's more M&A to come in the sector. I think there's more upside to come in the sector. But Rome wasn't built in a day. The gold price doesn't get to 4,000 in a straight line. There are going to be blips. There are going to be times when the trees get shaken and people fall out of the trees. So I think at the moment we're seeing that. But if you keep the faith and you buy on the back foot, you are rewarded, I think, going forward.
Yep. Just briefly, we do have some results from Kathmandu or KMD brands continuing to struggle.
Yeah, they are continuing to struggle. It's weather related, a very warm autumn in Victoria. Who would have thought? And so that has really affected the sale of puffer jackets, I guess. You think they might have picked up on the rip curl side of things, but this stock, I guess, has been under some pressure. We saw, the big bounce and the big sort of move towards wetsuits and surfing during COVID as one of the few things that people could do. But since then, it has been a bit of a struggle street. And today they're talking about, EBITDA to fall between 15 to 25 million bucks, down from 50 million the year before. Sales down 1% for the 10 months to May. Group sales were down 0.5%. So, clearly the the retail sector is suffering in places, and this is very much weather related. It appears warmer weather does hurt, stocks like Kathmandu. You can almost guarantee, that if it does warm up a little bit, all those winter woolies that we buy and those puffer jackets and the thermals, they suffer. Having said that, you think they'd have got a boost from warmer weather during Easter, but maybe not. But yeah, not such good news for Kathmandu.